Hey, it's Clay Trader, and this will be a video chart on the US dollar. This is about the fifth video I've done in this series. Started to do them up around this area and have then just tried to do one once every couple of weeks or so. And we finally kind of had another event here that's justified doing another video to get things updated. Nothing huge has happened, but once again, kind of sitting around one of those important areas, so it's at least worthy to note it and let people know that a bigger type shift may be coming here. But all these annotations you see are from the previous videos I've done, and it's nothing that I've added going into this video. They've all been sitting here. So just a real quick recap on what all these things mean. This right here is obviously just our downtrend line, and as you can see, using this point and this point, it's done a good job of showing kind of the direction of the price. So I'll just extend that out. This 82.60 mark was just one of the key resistance areas on any sort of bounce, and it still is. So let me just extend that out. And then this blue line here was a real short-term top of this channel, because as you can see, for a while here we were just bouncing up and down and kept hitting our head up around this area. And once again, that still holds true, so I'll get that extended out. But now the key thing that we've had is the price had recovered nicely, and then for a few weeks and almost basically this whole month here, it stayed up above and was nicely above this support line here, right around the 78.25 or so range. However, recently, as the market has begun to shoot back up, two things have been going on. Gold's been making a recovery, and oil has been going up. So when those things are going up, you know that the US dollar is losing some strength, and justifiably so, it has now started to drop. So now we are sitting right here at this key support level again. Now keep in mind, back here in early June, we bounced off this level. You can see the price came down here and bounced. And now, no surprise, we haven't quite bounced, but we are stabilizing right around this area. So this next week and pretty much the whole month of August is going to be pretty interesting in terms of, is this line going to hold? And if it does not hold, is this line down here, this 77.70 range, is this area going to hold? Because if this doesn't hold, then I'm going to need to pull up a whole nother time frame chart to be able to figure out where the next support levels are. But the key point here is, obviously after this big move here, in the strength of the dollar, the price has really started to fall as the market has bounced. So that's just telling us that, yeah, the markets are bouncing, but looks like there's money and so forth being pumped into the system, and obviously supply and demand. When you're adding supply, those dollars are losing their value, and this is exactly what we're seeing right now. So obviously, the weak U.S. dollar is not necessarily a bad thing. Some governments, or excuse me, some companies' balance sheets will improve just because they are dependent on foreign goods or imports, exports, etc. So a falling dollar is not bad all the way around. It does help some companies out. So I'm not saying this is total doom and gloom, but at the same time, we obviously don't want to, as a country, don't want to see the dollar fall totally down the rabbit hole and never come out again. So I'm hoping that it'll stabilize around here and not necessarily bounce back up, because I'd like to see the markets make more of a turnaround, but at least maybe bounce sideways here for a few weeks, maybe even a month or two, and just let things, hopefully the dollar, stabilize out. Looking down here at the indicators, the stochastic is actually down here in oversold territory, so it's suggesting that you could see some upside, and on the upside this indicator would have a lot of room to move. The one good thing about the MACD is the price here is basically at the same lows, not exact prices, but same areas. And then you look down here at the MACD, this low was formed when the price was down here, and once again, relatively same area, but now look how high the MACD is. So that's good that the MACD is making higher highs here, even though the price is basically making an exact same type low. But like I said, nothing groundbreaking or anything, but it is a chart. It's an economic factor that you should keep track of. It's always good to know where the US dollar's at, because that does dictate so many other things, whether it be gold, oil, companies' balance sheets, and so forth. So it's worth thrown on your radar, and you don't have to check it every day, not even really every week, but every couple of weeks or so. Just check out the dollar, see where it's at, and kind of get a idea of what's going on in the broader economic situation. So if you have any questions on this, feel free to shoot me a message, and I'll do my best to help you out. And I'd also encourage you to look down into the post by the free ebook. Click on that link, and if you sign up for my free newsletter, you'll get chart setups that I'm looking at, hot plays that I'm looking at. We just had a 76% gain on one of our plays, so a lot of good stuff. And none of it's publicly made. You have to sign up for the newsletter to get this stuff. So it's all free though. So check that out, and hopefully you'll sign up for it. But once again, this was US dollar. If you don't have any questions, then I hope you learned something, and hopefully we'll see some stabilization here and not see the dollar just continue to tank and tank. So have a good weekend, and we will see you on Monday.